Hello. In this video, we'll be going over IRS Form 13844, Application for Reduced User Fee for Installment Agreements. So this is a tax form that you might use if you are considered to be a low-income taxpayer who is entering into an installment agreement with the Internal Revenue Service. So for installment agreements, low-income taxpayers are able to either reduce or completely eliminate any setup fees that are associated with putting an installment agreement into place. So first, we're going to go through some of the verbiage and higher level concepts. We'll go through page 1 of this form. We'll talk about how to navigate this form and how to file it. But this is a tax form where all of the required instructions are contained on the form. Now, we'll put links in the show notes to other tax forms that you may be using, such as the installment agreement request, which is IRS Form 9465. But our focus for today's article is simply how you may qualify as a low-income taxpayer, how to understand this form to make that determination, and then how to complete and file this form so that the IRS can either reduce or waive your user fee based on the conditions of your installment agreement. So let's take a close look at the top of this form. Basically, this is the part where a lot of people kind of breeze through it to get to the information fields. So in general, a low-income taxpayer, and we'll define that in just a moment, is able to reduce their user fee to $43. This is compared to the standard user fee, which can range up to as high as $225. And again, this is to set up an installment agreement, and it basically depends on the type of installment agreement that you're setting up, the type of payment plan, and how you set that plan up. We break a lot of this stuff down in our article on this tax form, so you can get that information simply by clicking the link in the show notes, or if you rather just go to the website, you can go to teachmepersonalfinance.com, type in IRS form 13844, and our article will appear, and you can go through and check out the most recent installment agreement user fee schedule. So the first question that we should address is how the IRS determines a low income taxpayer. So that's fairly straightforward. Basically, the low-income taxpayer status is defined by the federal government as an adjusted gross income at or below 250% of the poverty guidelines established by the U.S. Department of Health and Human Services. So that Department of Health and Human Services updates the poverty guidelines each year, which means that the table that we will use to make this determination is also updated every year. So for quick reference, this is the table. As we talk about it, I'll visit back here and walk you through how to understand this for yourself. So if you are a low-income taxpayer, then you can either agree to make electronic payments through a debit card or a debit instrument, as the IRS calls it. You can go into what's known as a direct debit installment agreement, and there are steps on how to do that within IRS Form 9465. We also discuss this in our article, so you can check out either article, either on this form or on IRS Form 9465 to better understand how you actually do this. So if you establish that direct debit installment agreement, a couple of things. One, the IRS will take the money out of your account at a certain prescribed date each month, and you are held accountable if there are not funds available in your account each month. But if you sign up, the IRS is willing to waive your user fees because it makes it that much easier to collect your back taxes. And that's pretty much the IRS's sole focus, is simply getting the tax revenue that you owe them, plus any penalties and interest that you may also owe. So if you're unable to make these electronic payments through a debit instrument, then you can still qualify for the lower user fee. Once you've paid off all of your tax debt, then at the end of that, the IRS can reimburse your user fees that you paid. So this form is only for individual taxpayers. This does not apply to corporations or partnerships. However, if you're a sole proprietor, you would be able to use this form. So if you apply and your application is accepted, then you still need to meet certain conditions in order to have the IRS either waive or reimburse your installment agreement. Again, most of this depends on your ability to pay on time, the IRS's ability to rest assured that your monthly payments are continuing unabated and that you're staying on top of the rest of your tax responsibilities. And then there is an address in this form where you would mail it to the IRS for processing. So there are 6 items on page 1. We're going to go over each one, even though you really should pay attention to the first 3. The items 4, 5, and 6 kind of help you navigate the table for low-income taxpayer AGI guidance. So the item 1 simply means if you're not able to make electronic payments, then you should check this box. The IRS will probably cross-reference this box with your submitted IRS form 9465. So if you are able to make electronic payments, and for some reason through your debit instrument, and you are able to enter into a DDIA, but you choose not to, and you do not select this box, then basically that's telling the IRS to not reimburse your user fee once you've completed. So again, this is for low-income taxpayers that are telling the IRS that they physically cannot make electronic payments through their checking or savings account. Item 2, family unit size. So this is the total number of dependents, which you include yourself and your spouse, that you claimed on your most recent tax return. And then right below that is the adjusted gross income. So we'll talk about these numbers that I put in here for our case study in just a moment. So to arrive at your adjusted gross income, or AGI, for your most recent tax year, you would go to either IRS Form 1040 or 1040 SR, go to a line 11. It should read adjusted gross income. That is the number that you would enter into here. So let's just briefly go over what items 4, 5, and 6 say. So in item 4, you're going to compare the information that you entered here in the table below, and I'll walk you through that in just a moment. Item 5, if your AGI that you entered in item 3 is more than the amount that's in the table, then you're not a low-income taxpayer. Do not submit this form. If your AGI number is equal to or less than that amount, then you are considered a low-income taxpayer. You should sign and date the certification portion of this tax form and send it to the IRS within 30 days from the date that you received your installment agreement acceptance letter. So again, within 30 days of the IRS accepting your previously submitted form 9465, you would need to submit this form to reduce the user fee or to waive the user fee. So if you submit this application, it's highlighted in bold that they will not consider your application if it's submitted 30 days or later after the date on your installment agreement acceptance letter. So in this case, we have a family size of 5 and adjusted gross income of $80,000. It's not stated here on this form, but let's just assume that John Doe and his family live in the lower 48 United States. So in this case, five members of his family, he could have AGI of up to $91,450 and still qualify as a low income taxpayer. Since his income is only $80,000, he would meet the criteria. Let's just change this around a little bit, and let's now call this 4 members. So in this case, they are above the threshold at $78,000. Their AGI is 80. They would not qualify unless they happen to live in either Alaska or Hawaii. So in this case, Alaska, the AGI threshold is still above the $80,000 income, as well as in Hawaii, but this would not qualify them if they were in the lower 48 states, Washington, D.C., or one of the U.S. territories. So once we understand this and whether or not you do or you do not qualify, let's assume that you do qualify. The rest of the form is pretty straightforward. You would enter your name, social security number, as well as your spouse's name, social security number as they appear on your income tax return. And then you simply sign this, and if it's 2 spouses, both spouses must sign, date the form, and this is a certification under penalty of perjury that you're eligible as a low-income taxpayer for installment agreement purposes based on your family unit size and your AGI. So you should make sure that your facts are correct, because the IRS can go back, and they will, to verify that your AGI is in fact what you say it is. So once you've completed this form, you would then mail it to the Internal Revenue Service, P.O. Box 219236, stop 5050, Kansas City, Missouri 64121-9236. So that's all we have for this video. As I mentioned, this is part of the installment agreement request, and generally it's a form that you would complete once your submitted 9465 IRS form is approved. There are also other forms that you may be considering using, such as a payroll deduction form, things of that nature that aren't necessarily directly tied to this. We'll put links in the show notes to the applicable articles and videos that we've created on some of these other tax forms and topics. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions, comments, or if there's another topic that you'd like to see an article or a video created for, please hit me up in the comments section. Thank you very much and have a great day.